and welcome to the Just Economy podcast. This podcast is being sponsored by the Community Reinvestment Alliance of South Florida, where we're building a just economy, one vote, $1 at a time. We'd like to welcome you to our initial podcast. This podcast will be something we will do on a continuous basis. We will have several guests. We will have several subjects to discuss, and we'll talk about how to build a just economy for our communities. We're looking forward to having you all be a part of it, and we're looking forward to have you as guests as well to talk about your different projects and programs as we build a just economy here in our community. Today, we have a very special first guest. He is the founder of the Community Reinvestment Alliance of South Florida. He's the founder of several organizations. He spent about 20 years down here in South Florida helping us to build a just economy, helping us to become community advocates, and helping us to build a better economy for all. And his name is Mr. Arden Shank, our founder and past chair of the board. Thank you, Mr. Shank, and thank you so much for joining us today.
Thank you, Cornell. Great to be here with you.
So, Arden, you've had extensive experience in community advocacy, not just here in Florida, but in Indiana, in your hometown area, as well as Washington D.C. I was wondering if you could just give us a little bit of your history behind community advocacy.
Thank you, Cornell. Well, I suppose the first started in the mid 1980s when I was working on housing policy and rental policy here in northern Indiana. And then from there to advocating by making change in the community, providing more housing that changes the dynamics. But then, of course, in South Florida, working at Neighborhood Housing Services of South Florida and changing neighborhood dynamics there with new housing, and working with South Florida Community Development as one of the co-founders to advocate for change and in Miami-Dade, and then with our organization, the Community Reinvestment Alliance of South Florida, to really begin looking at all those financial policies kind of behind the scenes that shape what we can do as we change neighborhoods and improve people's lives.
Thank you, Arden. And we were so grateful to have you down here for the little bit of time we had you here. We hated to see you leave, but we know how important it is to go home. But you've left some great leaders here, and you've left a grand legacy on South Florida. So we're going to talk about the Community Reinvestment Act today and do a little intro to folks on the Community Reinvestment Act and get your thoughts on the Community Reinvestment Act, better known as CRA. For those who didn't know, the Community Reinvestment Act is a law that was enacted in 1977, and it requires the financial institutions, i.e. the banks, to reinvest in low to moderate income communities where they have branches. Branches are kind of a funny word these days because branches are kind of slowly but surely going away as technology increases and the community banks more through technology. However, they still are required to reinvest in the community, and that includes social services, philanthropy, affordable housing, mortgages, and small business loans. So they are required to do that. Now, there are reasons why this law was enacted. Especially after World War II, when the military was integrated, and soldiers came home from World War II, they came home with something called the GI Bill. And most of those soldiers, the first thing they would do is invest in buying a home, because in this country, wealth is based on owning property. That's where it starts, and that's where you build, according to the traditions and customs of this country. So, actually, what happened was as these GIs came home, and in certain areas, African American areas that were segregated parts of towns and cities, they would actually put a map on the table, draw a red line around that around those African American areas, and they wouldn't make loans, mortgage loans. They didn't do small business loans. They didn't do philanthropy. They didn't do any social services in those areas. And that was became known as redlining, and that was a common practice for a very, very long time, from the 40s all the way and beyond, all the way into when this law was enacted in 1977. And that's what brought about this law, in order to encourage investment and stop discrimination and segregation of those particular areas. Arden has a history with this law, and Arden has taught us how to better use this law. And let me say this: Arden is also a board member of the National Community Reinvestment Coalition, the national organization whom we partner with. And so Arden's extensive knowledge and extensive history of this law and how it's been used is something that's vital as far as knowledge is concerned in our community. So Arden, I have a question for you. So what has your experience with the Community Reinvestment Act taught you?
Well, Cornell, it goes back to the late 80s and early 90s when I was leading an organization here in Northern Indiana. And I had been learning a bit about the Community Reinvestment Act, and I knew that banks were required to provide banking services, investment, and loans. But it was all brand new to me. I didn't know much about it. But I had been told that every bank needs to have a CRA file, and that it's open to the public. And so one day I picked up the phone and called one of the local banks and said to the person that answered, "I'd like to make an appointment to come and see the CRA file." And there was silence, and she said, "Just a moment." And then she came back and said, "Somebody will call you in a little bit." Well, clearly she didn't have any idea what a CRA file was. And so within the hour, the president of the bank called me, and we had a conversation. And I talked with him about how we can increase the bank's investment in the community and with my organization then. So that was the beginning, 30 some years ago. And I learned from that encounter and other ones like it that there's not anything to be afraid of when we advocate for directly with banks and have conversations with banking leaders to encourage them to do more in the communities where that's within their geographic area. In more recent years in South Florida, there were times when I had a contract for a line of credit or an investment from a bank. At the same time, I was writing a letter to that bank's regulatory agency. And so both working together and challenging can be done at the same time. But I should add, Cornell, that CRA didn't come up in a vacuum. It wasn't like the Community Reinvestment Act was just kind of some brainy idea that somebody had out of nowhere. No, as you indicated, there's a long history of redlining and discrimination, primarily based on race and cultural background, but also based on income. And so in 1968, President Johnson signed into law the Fair Housing Act that identified and challenged the discrimination that was taking place. And the advocates chaired and were really glad that this took place. But it wasn't very long until community representatives and advocates realized that we don't have any data. We don't know what the banks are doing specifically. We know the stories, we know the anecdotal evidence, we know the pain and suffering, but we didn't have the data. And that's when the Home Mortgage Disclosure Act was passed in 1975 that requires banks to disclose on an annual basis the location of their mortgage lending and then the race and income of the borrowers. And that was a major success.
Thank you, Arden. We're gonna come back to you. We're gonna go to commercial right quick, and then we'll come back and we'll continue our discussion. Thank you.
Right.
So, Arden, and we're back. Arden, thank you so much for your insight on the HMDA. I think a lot of people don't understand how important HMDA is and how that has influenced how the banks do business and influence how the community responds. I think that's key. So I want to ask you about how banks are examined and the bank examinations and the regulators. And you talked about going and seeing this and looking and asking your bank for the Community Reinvestment Act report. So could you discuss a little bit the bank regulators as well as examinations?
Right. So there are three, on the federal level, there are three banking regulators. The OCC, that is the Office of the Comptroller of the Currency, the FDIC, Federal Deposit Insurance Corporation, and then the Federal Reserve. And those three entities need work together to regulate all of the banks in this country, because the CRA is kind of an idea without legs, so to speak, without the regulation, because the act itself is really, really brief. And basically it says that financial institutions, or more specifically banks, because not all financial institutions are covered, which we'll get to later, that banks have a continuing and affirmative obligation to help meet the credit needs of their local communities in which they are chartered. That's it. That's it, Cornell. That's all there is.
Really, really simple.
And so that hasn't changed since 1977. What has changed is the regulatory environment. But even that hasn't changed for 26 years. The last update of the regulatory environment and how things are actually done with the exams is 26 years old. It was last done in 1995. So that's a crucial issue that is needed to bring things up to date for where we're at. But before getting into some more detail, when banks are reviewed, they're given a rating, and it can be outstanding. That's the top one, and that's where most of them land. Satisfactory. The third one is needs to improve. And the fourth and bottom one is substantial non-compliance. And those last two, needs to improve and substantial non-compliance, are considered failing, that the bank failed their exam from the standpoint of the regulators. And that can result then in delays or denials of mergers, acquisitions, and expansion of services. And so this whole process is essential in making public what's going on with banks. And it doesn't matter whether they're a small bank in South Florida with 5 branches, or whether they're one of the large national banks that we know about. So it's really important that this be done, and as advocates, both from CRASF and from the National Community Reinvestment Coalition, we really want the 3 agencies to work together. Sometimes they're off on different tracks, and that's been happening a bit over the last few years, but now there's an encouraging environment where the 3 regulatory agencies may begin to work together in updating the regulatory rules and standards for how things are done.
So, Arden, let's say I put you in charge of the Community Reinvestment Act and regulation, and I made you the man for a couple of weeks, and you can make changes. What would those changes be?
Well, in the testing environment of the regulation now, there's 3 different tests. One's the lending test, primarily for mortgages, but somewhat for small business, investment, and then the third one is the service test. And for some folks, that's what they see the most from banking, other than a mortgage loan. For me, if I could have that 2 weeks to make a whole bunch of changes, the first one would be to expand CRA beyond state and nationally chartered banks to include credit unions, more standalone mortgage companies.
Yes.
Often a bank will have a mortgage company that they own, but I'm talking about standalone banks, investment banks, and fintechs. Right now, all of these entities are working in the lending and investment world without the regulatory environment around them. Credit unions are a little different because the National Credit Union Administration does do some things that's in terms of regulation, but it's not near as comprehensive as what the CRA would be. So that'd be number one. Another one that has changed with the growth of internet banking and being able to have a loan officer in another community or another state outside of the immediate geographic area where the bank has branches. And that is expanding or redefining the assessment area for each bank. Each bank defines an assessment area, which is basically where their branches are. But some banks are doing what's called substantial business, that is mortgage lending, in communities hundreds and hundreds and maybe even thousands of miles away from the outside edge of their assessment area. And that really needs to change so that the assessment area includes any area where the bank conducts substantial business. So those are 2 big ones. I can keep going if you want me to.
Give me one more, and then we're going to go to commercial. Give me one more. I'm giving you all the power now. You have all the power.
The third one I would mention is that community benefits agreements need to play a larger role. And of course, as you know, we have been involved in several of those community benefits agreements, but it's completely and totally voluntary. There is a requirement to include some community participation, but it's pretty thin and sometimes hard to see. And so I would really want to have the community benefits agreements play a much stronger central role.
I totally agree, and that's something that we, as the Community Reinvestment Alliance of South Florida, we are working towards advocating with our partner, our national partner, the National Community Reinvestment Coalition, or since NCRC. We're looking at working with them on trying to advocate for the community benefits agreements. The NCRC has initiated or had community benefits agreements with several banks totaling over $350 million. We have been a part of 6 of those, the Community Reinvestment Alliance of South Florida. We have been a part of 6 of those, totaling over $150 billion. So I totally agree with you about the community benefits agreements, and especially adding some nuances that I would add just in my experience the last 4 or 5 years in working with them. Just add some nuances as well, so we can better calculate how the banks are actually doing, adhering to those community benefits agreements, and how they're actually doing in our community. I'd love to have them drill down and give me numbers of what they're doing in this community. What are they doing in South Florida? So thank you very much, Arden. We're going to go to a commercial, and we'll be right back. Thank you so much, Arden. And welcome back. Thank you very much for coming back to the Just Economy podcast, building a just economy, $1 one vote at a time. And we're with our guest, Mr. Arden Sheikh, founder and and the initial board president and past board president of the Community Reinvestment Alliance of South Florida. Thank you again, Arden, for joining us today. So I wanted to move on to the National Community Reinvestment Coalition. They are our national partner, and I would love for you to give us just a little bit of their history and your role in that.
Thank you, Cornell. It was probably about 2009 when I invited John Taylor, the founder and former CEO of NCRC, to come and speak in Miami. And he said, I'd be happy to come, but I'd like something in return. and that is, he said, we've had real difficulty getting any footing in Florida to bring neighborhoods and communities and nonprofits together to work with banks in increasing the role of banks in lending and investment in many of the communities, and making credit available. And so things began to evolve, and in 2013 I joined the board of NCRC, and then by 2015 we opened the door, so to speak, of the Community Reinvestment Alliance of South Florida, with you and our other colleagues on the board. It's been great to see the development and the amount of training and education that has come so far.
And we definitely thank you for doing that, Arden. It is so important that we educate the community and provide those partnerships and collaborations between the nonprofits, government, corporations, and the banks. So I have to ask, why did you think it was necessary to actually found our organization, and what was your mindset when you first decided to start it?
Well, even though I have founded several organizations, I'm really cautious and want to make sure that it's needed. And so I looked for another organization to lodge the CRA advocacy and financial justice work, and wasn't able to find something that really worked. And so that was the initial basis of CRASF. at beginning. And as you know from your role after being on the board for a year and then becoming executive director, so many of our nonprofit colleagues have never heard of the Community Reinvestment Act and how it requires banks that affirmative obligation, as the law reads, to be involved in making credit more available in those communities. And many banks now realize that making loans and making investments in lower income neighborhoods and with folks of lower middle income, they can make money doing that. And that's what it's all about.
I agree.
And as our friend John Taylor has often said, the banks are the best friend of low income neighborhoods because that's where the money is. And that's our money. People from across our communities put that money in the bank. And so that's why I felt like we needed the Community Reinvestment Alliance of South Florida. And we chose the three counties of Miami-Dade, Broward, and Palm Beach because it is a large metro area that is the kind of basics of a geographic area for a bank, whether it's a small bank with a few branches or one of the very large banks. They're in more than one county. Yeah. So that's the background.
Great, then. Thank you, Art. And it's a privilege to work here and to be under your tutelage and learn and be educated about how important the Community Reinvestment Act is to especially the low to moderate income communities. So as we move into the future, Art, and we know that you've moved back to Indiana, our loss, their gain. We know that we want to build the Community Reinvestment Alliance of South Florida. How do you see its future? It's your baby. How do you see its future?
Well, as we've talked about in board meetings, there's both a breadth and a depth. The depth is there's more we can do in South Florida. Involve more people in the conversations around community benefits, encouraging nonprofits to have regular conversations with more than one bank, invite them out to see what's going on. So that depth we can still build on, we can still do more education and train people how to make those contacts. The breadth is we're getting interest and we're getting calls and inquiries from other parts of Florida. And so the move is right for expanding to other parts of Florida. And that will strengthen the voice when we're talking, especially with some of the mid-sized banks that have branches not only in Miami and Fort Lauderdale and West Palm, but they have branches in the Tampa Bay area and Orlando and Gainesville and Jacksonville, Tallahassee, the Panhandle, and so on. And so it by building a broader network, it gives us more information, more people, and more ability to communicate with the regulators and the banks in getting access to credit for everybody.
I totally agree, and I look forward to helping to lead that effort. Those other communities that you mentioned have some very similar issues to what we have. We, as an organization, we are involved in quite a few things. We sit on committees for affordable housing. We sit on committees for climate change, climate gentrification, sea level rise, transportation, racial equity, income inequality. All of those things are connected to a just economy. And as we try to build this just economy, $1, 1 vote at a time, we want it to not just to be a saying. We want it not to be just a slogan. We want to make it an action item, so that everyone in the community can participate equally. We know, in particular in South Florida area, we have quite a few things that affect us, and quite a few things, and one drives the other. The racial inequity drives transportation issues, which drives sea level rise, climate gentrification, which drives affordable housing. All those things are connected. So we're looking to be the connector as far as an organization is concerned, in order to connect all these items, build partnerships, collaborations, not only with the banks, but with the nonprofits, with government, with transportation, with for-profit corporations. Because here's the thing: we all have to live here. Arden has taught me well, and I have quite a few meetings with bank presidents, and I talk to bank presidents all the time about the different items that affect our area, particularly when we're doing community benefits agreements. We always get to participate as far as those negotiations are concerned, and we always get to talk. We always get to talk about being a part of it and interest those in the community. So I want to thank you, Arden. Thank you so much for founding this organization. I want to thank you so much for hiring me or being part of the committee that hired me. I greatly, greatly, greatly appreciate it. This, again, as folks, this was our initial podcast. We will have more subjects, more folks on this particular organization and how we can build a just economy, $1, 1 vote at a time. Again, thank you very much, Mr. Arden Shank. We appreciate you, and we look forward to seeing you in the very, very near future. You got to come back down. It's about to be wintertime up there. Time to come back down to South Florida and get some warmth. And we greatly appreciate you. And thank you for listening to our podcast. Thank you so much. We look forward to seeing you very, very soon. Thank you.